the interplay between cryptocurrency and real estate. So talk to us about that and tell us about what you do.
Yeah, the like you mentioned, right, the crypto lending market is pretty large, right? I mean, crypto lending's been around for 8-9 years, and if you think about the size, right, at one point there was about $65 billion in crypto loans outstanding. Right now there's probably about 25 to 30 billion, and globally. And what we realize is that for a lot of those individuals, the reason why they were taking them out is for real estate, and we were in the mortgage lending space. Milo is a company I started 6 years ago, and we were lending to international clients buying real estate in the US. And we felt we had a unique perspective and a unique angle building technology in our platform that we could really think about this consumer set. And I had been in the space for a while, and we assumed that someone would have probably built something like this, meaning combining both real estate and more liquid Bitcoin collateral, and no one had. And we felt we could do something about it. And a few years ago, we built the first crypto mortgage offering, and we're able to sort of combine the benefits and nice features of real estate and a stable collateral, as well as the liquidity of Bitcoin, and bring both of them together and be able to help people finally buy homes, because so many of them hadn't bought homes because they refused to sell their Bitcoin. And honestly, that's one of the reasons why their assets have grown so much, because they've been fortunate to hold Bitcoin, right, for 10 years plus.
I'm curious. I know you'll do mortgage lending, or I don't know if we should even call it a mortgage. Is it a credit line? Or, well, it is a mortgage because it's leaned against the property, and it's also leaned against Bitcoin or Ethereum.
Correct.
Do you loan just against the cryptocurrency only with no real estate in the deal?
We do have that product as well. So we will do just crypto loans. That is one of the things that our customers started asking us, because the crypto mortgage, Bitcoin mortgage, it's very specific if you want to buy real estate. But a lot of individuals wanted to do home improvements. They wanted to potentially get down payment financing and get a mortgage with somebody else, and we could solve those pain points for them, given that our product is trust, right? Is making sure that when someone comes to us and they want financing, we give them the dollars that they need, but we make sure that their collateral is protected with our qualified custodians, Coinbase and BitGo. So that's very, very important. So, we expanded that offering. We felt that there was a need for it, and we felt we could do a good job, and we've been offering that now.
So I think that'll be a good lead up to talking about the way you finance real estate. We'll get to that in a moment. But I want to first ask you, just let's peel away the real estate for a moment and talk only about crypto financing. So you'll finance Bitcoin. We also finance Ethereum?
Yes, we do.
Okay.
The majority of our transactions have been mostly Bitcoin, though.
Okay, great. And tell us about your financing those. I mean, how much leverage will you give me against my Bitcoin, and what are the terms of that loan?
Yeah, the crypto loan, it's really a secured loan. If someone wants to be able to borrow $100,000, there's not going to be this extensive underwriting process or credit check or income verification like you would have in a personal loan. It's really based off the fact that you do have Bitcoin. So if you want to borrow,
it's an asset-based loan.
It's asset-based loan. You want 100,000. We're going to need $200,000 worth of Bitcoin, 2 times the amount of the collateral. And we can disperse 100,000 to you within the same day. There's not a lot of underwriting that goes into it.
Yeah, it's really quick and simple. So basically, it's a 50% loan to value ratio on Bitcoin, right?
Correct.
Is it the same on Ethereum?
Yeah, the same.
Okay. So 50%. So, one of the reasons we love real estate is because we can get much higher leverage than that. But tell us, before we move on to the combining real estate with it, tell us about the terms of that loan. So, I've got $200,000 in Ethereum or Bitcoin, for example. I want to get 100,000. You can give it to me quick. That's great. Yep. You're going to custody my cryptocurrency with, say, Coinbase, or what's the other one? BitGo. Okay. So you're going to custody it there. And what will be the terms of my repayment on that?
Yeah. So this is a 1-year loan. It's an interest only, and it balloons at the end. A lot of our clients, what they do is they just roll it, right? They extend the term for another year.
Assuming the lender wants to extend, though.
Correct.
Just a 1-year loan.
Exactly. In our case, right, we're in the business of putting out capital, so we're happy to extend it, and that's subject to the person making payments, right, and everything going according to plan.
Well, and it's also subject to the market. If Bitcoin gets slaughtered, for example, you're not going to extend that loan,
right? Or it'll be a smaller amount, right? It'll be proportional, right, to sort of those levels. But the real benefit is that if you wanted to go and borrow 100,000, 150,000, 200,000, and you walked into a bank, or you walked into an institution, it would probably take you a decent amount of time, right?
Totally understand. Totally understand. Right. So in this example, $200,000 worth of Bitcoin or Ethereum, $100,000 loan. What are the terms? So it's all due in 1 year. Is it interest only until then?
It's interest only.
At
Rates
what rate?
are, call it, 12%, somewhere in that range. And you make monthly payments and balloons at the end, right? So
okay, great. So that's pretty equivalent to a hard money loan. That would be the way a hard money loan structure is, just on crypto instead of.
It is. I think that the unique thing is, if you're doing a hard money loan, right, you're going to have closing costs, you're going to have title fees, you're going to have recording fees, right? You're going to have all these other elements. In this, you're not going to have any of that.
There's no fees at all.
There's no fee. I mean, there's an origination fee that we charge, right? That's 1 to 2%, but it really is one of those additional tools that. We've seen some of our real estate investors use this to be able to buy land or buy other things that are sure. Part of the finance, right?
Okay, so it's basically 12% plus 1 or 2 points.
Correct.
Is what you're saying. Okay, great.
Right.
And what happens though, say that Bitcoin, that $200,000 worth of Bitcoin or Ethereum, say it goes to 50,000. So it's underwater, this loan, right? And now the lender is starting to get anxious because the deal's underwater. Can you call that loan?
Yeah. There's going to be a level where the client would need to post more collateral or reduce the loan balance.
So it's a margin call, basically.
Correct. So that's the trade-off, right? Because there's no other collateral or other sort of recourse, right, to pay down the loan that you're really looking to the Bitcoin collateral, right, to be able to mitigate some of these events.
Yeah. Okay. And is that personally guaranteed, or is it just the collateral?
Nope. It's just collateral. Yeah. There's
no personal guarantee, but a margin call. And if you don't make the margin call, you take the collateral, but
you pay down. You pay down the loan, and then you return the remaining collateral back to the borrower.
Okay, so but let's just take this example before we get to the real estate. Right. The collateral was worth 200,000. It went to 50. And say that's 3 months.
So the margin call would be if the collateral is worth 133,000, right? So there would be the loan amount was 100, right? So it's going to go down by a level that still is in excess of the loan balance, and then the remainder from that to the loan balance will be returned to the client.
So in other words, you've got about a 35, give or take, % margin. The margin call happens when you're not even underwater yet.
Correct.
Right. Okay. So the lender's pretty safe there. Your investor is pretty safe on that deal, it sounds like.
Correct. I think from a principal protection perspective, right, we feel we're covered. Yeah. Ultimately, though, from a business perspective, right, we never want that to happen because it means that the individual's collateral has gone down, as well as now the loan is effectively paid off as well, right? So.
Yeah. Okay. Say you borrowed 100,000. Your collateral was worth 200. The collateral's now at 120,000. Yeah. You've got a margin call. You're, like 13% below the margin call, and you can't pay it or you don't pay it. Yeah. And you just say, I'm not paying the margin call. You'll take the Ethereum or the Bitcoin now, right? And you'll now own that.
Well, it'll be sold to cover the loan balance, and whatever differential will be returned to the customer.
Oh, okay. But if it's worth $50,000, if it's below
so the margin call would happen before that, right? There wouldn't be a situation where we'd be down to 50,000, right? There'd be.
I don't know. It could happen. Those swings are pretty quick in the Bitcoin market.
It can, but we have ways of basically mitigating sort of margin in our ability to sell collateral, right? With our risk management system. Okay,
got it. But the only thing I want to make clear is if you as the lender lose money on the deal, do you come back to the person? Is it a recourse loan?
No, there's no recourse to the borrower.
So there's no recourse. So you're taking the entire risk on the collateral maintaining value.
Absolutely. Yeah. It's our ability to be able to make sure that we can monitor the collateral. And then, in situations where this is happening, right, through our platform, the customer knows that they're getting closer, right? They can post additional collateral, right? We've had clients that have gotten closer and they've posted more Bitcoin, right?
Okay. Sure. Yeah. Okay. And is there any negative credit reporting if they default?
Nope.
Okay.
No, there's not. Okay, good. No, the recourse is to the Bitcoin, right? So for some individuals, right, that is a very big plus, right, for them to be able to borrow large sums of money relatively quickly without, a very broad type of credit underwriting.